What I'd like to start with today is just to find out how many of you are already on the QuickBooks version and how many, oh, we have a lot going on, and how's it going? Was that a deep question for everyone? As long as you're consistent. Well, that's with any bookkeeping system, as long as you're consistent. Yeah. QuickBooks, I find, though, is very forgiving. If you do make mistakes, going back and correcting them is fairly easy in QuickBooks. As John had talked about earlier, what you want to do is keep your audit trail on. Your audit trail will see, especially if you have multiple people in your organization in your QuickBooks file, you want to keep that audit trail on. That will allow the person who's ultimately in charge of those books to go back and see that Betty went in and deleted something and wasn't supposed to. And that we'll look at on our QuickBooks here. The examples I'm going to be using is a nonprofit organization. I'm using 2013 QuickBooks. So some of the features there, if you're running an older version, you may not have those features. The first thing I'd like to talk about is, which John had hit on, is payroll. Do many of you do payroll within your organization? Yes, and within QuickBooks? Okay. How about outsourcing? Then the others outsource and bring it into your QuickBooks by journal entry? Outsourcing? Okay. As John had mentioned, if you are not familiar with QuickBooks or with payroll, sometimes it's easier to get that outside company to do it. QuickBooks is very user-friendly as far as payroll goes, but you need to have background. It's just not going to, you turn on the software and it's not just going to happen. There is setup involved. If you decide to go in-house with it, maybe have your accountants help you set that up, make sure you're getting all the taxes right. Last thing you want to do is go to your employees and say, I didn't withhold enough taxes, or your paycheck is wrong. I mean, that's something no one wants to do to their employees. In your materials, the first section we're going to talk about is the chart of accounts. John had briefed on the chart of accounts. Even if you're not transitioning into QuickBooks, it's always a good time to look at your chart of accounts. I find when I go into organizations that we work with, the chart of accounts is just a lot of stuff on it. It's confusing. People don't know where to put something, so they set up a new account. And it just becomes that your chart of accounts is just overwhelming to anyone. If you have transition of employees, it's hard to tell what's to go into those accounts. So you want to review your chart of accounts. If you can get rid of some things, get it down to a manageable size, that would be helpful for everyone. What you want to understand is your chart of accounts is going to translate into your financial reports. So if you have 16 postage accounts, do you really need them? And is that information that someone is really going to make a decision on? You want to make sure to get those accounts that mean something when you print reports. So when you go into your QuickBooks, you want to make sure that you turn on using account numbers. Using account numbers makes it a lot easier for you to determine what account things go to when you're coding your expenses. It's easier to do it by number. Your accountants or your auditors will work with those numbers also. It's easier for them to tell you to post something to account 720 than an account with a name. So you want to make sure that you turn on using account numbers, and I've given you a screenshot of that in your material. And everything that you do here, you do through Edit. So the moves I made there, I just went up to Edit, and then there's Preferences. When you set up QuickBooks, there's all kinds of preferences that you can choose from. You can set QuickBooks up the way your company wants to set them up, what you see when you want to go in, and the things that you want QuickBooks to do. So it's hard for me to give you advice on that because each organization is going to be different on how you want to set up your QuickBooks. But up here I have use account numbers checked, require account numbers. So it's always going to require you to put an account number in when you set up a new account so that your numbers become consistent. Okay, so this is back to just a chart of accounts for this organization. If you look at salary and wages there, my account 7,200. What this organization did was set up a main account, a parent account called salary and related expenses, and then underneath are what are called sub-accounts. These sub-accounts become important when you're printing reports. As John had mentioned, maybe your finance committee wants to see a report with all that detail, with all those sub-accounts. Maybe they want to see salary and all the benefits broken out. When you go to your complete board, maybe you just collapse that and all they see is salaries as one number. So you want to be able to go to the people who are making decisions with as much detail as possible. Then if you're going to your complete board, if you can consolidate things, give them the numbers they need to look at, but it will be less detail. And as we say, sometimes less is more. You don't want to overwhelm people who are really not numbers people with a lot of numbers. And in QuickBooks, you can do this by using sub-accounts. So what I pulled up here was a profit and loss statement, and it has our account 7,200 salary and related expenses. It gives you all the numbers, all the breakdowns between those sub-accounts. If we now want to take this report and we can hit the collapse, and it's going to collapse that 7,200 account into something smaller, a little more manageable for people to see what your salary and benefits are costing in total. Does that make sense to everyone, or as far as setting up sub-accounts in your chart of accounts? We recommend, and I have listed there on the bottom of page 1, a numbering system to keep your accounts kind of consistent. We start our assets normally when we number things with a digit of 1 at the beginning. Depending on how big your organization is, how many digits you're going to put after that. Liabilities start with 2. Net assets or equity are 3. Revenues start with 4. Expenses start with a 6. If you have cost of goods sold, that would be a 5 number to start with. Other income starts with 8, and other expenses would be 9. That's kind of a consistent use that accountants suggest. That way you don't have random numbers all over the place. It kind of gives you some range and some guidelines on setting up those numbers. Along with that, when you set up new account numbers, if you're going in, you're going to set up cash account 100. You want to set up another one. Skip some room. So maybe go to 105. That way, if you want to put something in between there, it gives you room to put additional accounts in there if you're adding accounts. In QuickBooks, when you're working with the chart of accounts, down to the right here, there's all kinds of things that you can do with your chart of accounts. That's where you do all your account maintenance, and you can keep things cleaned up there. If you have accounts that you're no longer using, you want to hide them. That will get them, they're still there, and all the information is still there. It just takes it off the chart of accounts so that you don't constantly see these accounts that you're no longer using. Kind of cleans things up. Makes it easier for the fiscal people when they're looking for accounts. You don't want to delete accounts. If you've used them in the past, don't delete them. Hide them, because you're deleting historical information with that. And you may want to go back, if you've had your QuickBooks for years, you may want to go back and you've now deleted historical information. So you want to hide things. That'll keep your history intact, but it'll keep it out of your way. The only reason I would delete an account if you set one up by mistake, never used it. So we kind of keep things clean there with hiding your chart of accounts. Yes, I would never delete that. Yeah, I would keep that history intact with your QuickBooks. You may never use it, but you want it there. You just don't want to that would be like a manual general ledger and you just tear a page out. So that if you have to go back, it's not there. So you want to keep it intact. When you set up accounts in QuickBooks, you have a chance to select the type of account that you're going to use. And some of them are very simple, income and expense accounts, that's pretty clear. The ones that really make a difference, your bank accounts, set it up as a bank account. That way it's reconcilable, and QuickBooks knows that you can go in and reconcile your bank account. Another one that's nice in QuickBooks is credit card. Any organizations have credit cards that they use in their organization? Yes. If you hit the credit card type of account, you can also go in and reconcile that through QuickBooks. You just take your ending statement, you put the balance in, you can check off the transactions that went through your credit card, and at the end, it'll allow you to print the check to the credit card company right there, or put it into your accounts payable for payment later. It's a great feature. We use it in our office. Our bookkeeper goes in, puts every transaction that hits the credit card. She cannot reconcile until she has a receipt from any of us. And that's sometimes a challenge, and it may be a challenge for your fiscal people if they get the receipts if you have multiple people using a credit card. So it's a good practice to make sure you have all those receipts when you go in and reconcile. So that's an account type that I think QuickBooks has done a good job on that, to be able to reconcile that to your balance at the end of each statement period. Any questions on account types, on how to set up accounts? Our next discussion is going to be on using classes. Does anyone use classes within their QuickBooks? Yes, good. What the classes are going to do for you, you can kind of think of it as setting up departments. So any type of revenue stream that you need to keep separate from other revenue streams, set up a class. And it should only be set up for one purpose. You don't want to be able to think that you can track two different reasons in one class. You want to do it, if you have one grant, you want to set up a class for that grant. You can set up subclasses, which means you could have a program, and within that program, if you have two or more grants, you can track them within that one program. So what I'm going to show you here is, okay, so I'm back under preferences for my organization, and they're under where we turned on the account numbers, we're turning on class tracking. So what that means is I have revenue streams that I need to segregate so that I can get reimbursement for them. So I've turned that on. I've also turned on right below it prompt to assign classes. That means it's going to prompt me every time to give a class to any transaction that I put into my QuickBooks. That way, hopefully I'm not missing anything at the end of the day, that everything has been assigned a class. So if I go then under my list, and I have classes set up here, And I've set these ones up here at the bottom. So I have a program 1 in my organization, and under that I have 1 grant. So I'll be able to enter any transaction into QuickBooks, and I will be able to assign it to grant 1. So if I go in, and I'm just going to write a check here. What it's going to do, off to the right, there's going to be a column that says class. So what you would do is in there is allocate it to the grant or the class, the program, whatever this expense is intended for. And it should tell us if we go to close it and we have that checked off that we want to prompt to assign a class, it should tell us before we close out that we did not assign a class if we didn't put a class in there. I'm going to go in and put a deposit in. And if you see right here, off to the right, it's asking me for a class. And that's where I assign the class for this deposit. And I assign grant 1 to that. Okay, so I've now put a $5,000 deposit into grant 1. So if I go to run a report, and I can run a profit and loss by class, in grant 1 here, we can see that $5,000 that I have assigned to that grant. Now it's also going to show up if I run just a P&L for my program 1 and don't do it by class, it will show in my total program 1. But that grant is now being tracked under program 1 there, grant 1. Your chart of accounts is going to span across all your classes. Okay, so you may have salary and wages. You may have a manager whose time gets allocated to 4 different grants or 4 different programs. So that person's salary and wages goes into the account salary and wages, but then you can allocate that between grants, between programs, and that's where the classes come into play. So you want to think of the classes as an allocation of funds that you need to separate and you need to track for reimbursement purposes. So if you go in and all your expenses during the month, all your payroll during the month, you allocate to those classes at the end of the month, you should be able to print a profit and loss for that individual class for reimbursement. And that is easy to track if you have a Lowe's bill, and that went to 4 different grants. You can break it out to those 4 different grants. You know you have not counted that twice for any grant when you go for reimbursement, or you know you haven't missed anything because you've now put a class in for that total bill. How do items relate to the chart of accounts and also to classes? Items are used when you invoice someone, okay, and you tie them to an account. So you can set up an item, say, called grant revenue. You could attach that to a specific account number, say grant revenue income, which would be logical here. And you can also tie that into a class when you do that invoicing. So what's going to happen is this organization is going to generate an invoice for grant revenue from whomever, grant source 1, and that will automatically, once you generate that invoice, it will automatically go into your revenue account and into your class because you've tied that item to the revenue account. Merge is a feature that you can use in QuickBooks. Items can be merged, chart of accounts can be merged. So if you're reviewing your chart of accounts and all of a sudden you realize that you have two chart of accounts, one named vehicle expense and one named vehicle dash expense, those two are carrying the same thing. You have no idea why you have two different ones. No one in the organization knows what the separation is. Don't delete. You can merge those accounts. And there's ways to do it in QuickBooks that can help you do that. It will merge them so they are now become one account. You don't lose your history. The history is just now in one account. Items that we were talking about here can also be merged. And this gentleman said they have a long list of items that they really don't need. So he can merge them, not lose the detail, and continue with his history and continue with less detailed, maybe invoices going out. Just easy explanations on those, and then breaking everything down by class. Evidently, you were breaking things down by item instead of by class. This is where the classes will help. Any transaction in QuickBooks, you can allocate it by class to get those grant numbers or those reimbursement numbers correct. That you should be able to, at the end of the month, print a P&L and see that everything is in those classes. Is that, any questions on that? Is that okay? What you want to do, if you do a P&L, if you do a profit and loss by class at the end of the month, and I would say that everyone should probably do this, if there's something on that you've done during the month that you did not put a class in for, there will be a column that says unclassified. And you want to make sure if you're running classes, you want to make sure you get any items in there classified. You can double click on them and you can put the class in at that time. Sometimes that happens, you're breaking down a check, breaking down something, and you miss one item. It may tell you, if you have it turned on, that you missed a class, and you may just say, yes, I'm hurrying out to lunch and go. So if you're running classes, if you're reporting to a board, you always want to run a P&L by class at the end of each month, just to make sure you've captured all the detail into your classes. So you have an account number, and then you have an extension sub-account for just one specific program. You don't need to do that. Lisa's saying that they have some of their chart of accounts, say salaries and wages, there's a sub-count there for a possible program. If you're running classes, you don't need to do both. You can have a standard chart of accounts set up for all your programs. Just use your classes as the way to allocate things. And that should shorten your chart of accounts. That should make your chart of accounts a little easier for your fiscal people. When they're looking through, they know exactly what account they're going to hit. The more detailed your chart of accounts, I think sometimes the more messed up they come. Some people use some accounts if you have multiple people in your QuickBooks. So the easier you can make it for your fiscal people to determine where things are classified, the better the reports are going to be that come out. So everyone, I would assume, works for with budgets here. Fun process for everyone. QuickBooks, budget entry is fairly easy. When you go in to do your budgets, you can budget by class if you're running classes, or you can just do an organization-wide budget. And the reports that come out, when you print reports then, you could, if you have a grant, you could do your actual to budget for just that one class, or you could run a report for your board that is organization-wide to the entire budget. And QuickBooks has very simple ways of doing this. I am under company across the top. and setup of budgets. And this budget is for the fiscal year 17-18. It's a profit and loss by class. So you would use the drop down here, and I'm going to go to my program 1. I'm actually going to go to my grant 1. And I can go in and enter my budget numbers. I can enter a 12th of my budget number, and I can just copy across there, and it's going to fill that in on a monthly basis for us. So that's a pretty simple way to get your budget entered, if indeed doing a 12th across is the way your budget would flow. You can also enter it monthly if this budget item kind of does one of these, or the money all comes in July. You could go to July and put the entire budget amount in there. And this, yes? Yeah, I would enter that monthly and make sure that you're quarterly. That way your reports aren't thrown off. If you, not sure if you put it in quarterly when you run a monthly budget, if that would take a piece of it. Because when you run your profit and loss, let's say you're on a calendar year, so January is your first month, it's going to compare actual to your January budget, to 1/12. So if you enter that just monthly, I'm not sure what it's going to do if you run a January and you haven't entered that quarterly till March for the first quarter. That makes sense. So we have reports here, and we can run a budget report that's going to show me, it's pulling January 2017, so it's going to have our actual numbers in the first column. It's going to show 1/12 of your budget. In the budget column, it's going to tell you over budget in dollars or over budget in percentage. The question is, this gentleman creates his budgets in Excel, and there is an import from Excel into your budget here. And I don't have one set up to show you, but there is a process that you can go through. It maps out your cells to where it's going into QuickBooks, and you can pull that in. So it does have that feature. Yes?
In that case, then, your chart of account would need to perfectly match up.
Correct. Correct. Yeah. So what you can export a chart of accounts into your Excel, most of the reports in QuickBooks can export to Excel, and there you would have your basis to start your budget process. If you decide to run payroll through QuickBooks, there's a separate subscription for that. You all need to be aware of. You don't get that with a basic QuickBooks. It's a separate subscription, and you need to keep it up to date. You need to pay that annual fee. You're short of funds one year. You can't say, I'm going to skip the payroll updates. Those updates change tax forms. They change tax tables. You may get to the end of the year and you're going to print W-2s and you don't have the proper format. So that's one thing you need to keep in mind when you're evaluating whether to do payroll in-house or have someone else do it. It is a separate subscription that needs to be kept up to date on an annual basis. You do not have to change your QuickBooks every year. People are still running 2012. You don't need to do that. You need to do the updates. I recommend when you open your QuickBooks and it says you need to update, do the updates. Takes a little bit of time, but keep them up to date also. And yeah. And you get to that point where they will no longer support it. If you call with a QuickBooks question and you're running 2005 QuickBooks, they're not going to help you. And they're no longer going to send out patches for problems. Any other questions on that, on the budgeting? What I'm going to show you right now is most reports from QuickBooks can be sent to Excel. If you want to manipulate those reports to go out to your board, I'm just going to create a new worksheet here in my Excel. And there's the report that we were looking at in Excel. And those of you who use Excel may be a little happier that you can do this reports in Excel. If you're used to Excel, a lot of people use that for different things. At this point, you can manipulate things on your report. You want to keep in mind, you want to keep the integrity of the report. You want to make sure that if you're sending a P&L to Excel and you're going to make it pretty for your board in a format that someone wants to see, make sure the integrity of the numbers are kept there, because you can do anything at this point. So you want to make sure you're not changing those numbers. For a board that I am on, this is a long report. I will take a profit and loss compared to budget and comparative 1 year to the next, plus I will also keep the budget amount on that. And off to the right then, I'm going to make comments to my board so they know what's going on. Contributions are down $25,000 for the prior year. Well, we had a big contribution the prior year, so I remind them of that. Or we had a fundraising event that was not successful. I'll put in there, it rained on our major event. Or one bill came in, and it was a timing of a bill from 1 year to another. So it's kind of nice in Excel that you can go in, you can put those kind of comments to the board so that when they're reviewing them, if you send those out prior to a board meeting, they can look at those and see what's going on. They still may have questions at the board meeting, which is good, but you can kind of put your comments in there as the fiscal people. What changes have come about. You got a new grant, so we see this money coming in. Put that on there. This feature is very nice in QuickBooks, that you can take these reports out to Excel and kind of maneuver them around to make them look the way the board wants them to look. Ease of use. When you send reports to Excel, I'm just going to send the same report. This screen comes up and there's an advanced screen. And there you can change things again to make things look a little nicer. Show the grids, not show the grids. That all depends. This is kind of prettying up the report. Once the numbers are good, you can make things look pretty through sending your reports to Excel. Reporting on in QuickBooks, sending your reports or developing your reports through QuickBooks, I feel it's a program that's very flexible and can give you things that you have a lot of room there to manipulate or to modify your reports. I'm going to go up here to Customize, and we have along here on the P&L, you can show the dollar change or the percentage change on a profit and loss statement. You don't want to see both of them. Make your report a little smaller. You can report on the change there. Customize. There's a lot of filters in here that you can filter things out of your reports or into your reports, I guess I should say. So this report, this is just a standard profit and loss. And I can, if I want to do this by class, I can just tell it I only want one class to show up on this P&L. So my program one class is going to show up on just this P&L. So what I'm doing is just pulling out one section, one class of my profit and loss for reporting purposes. The periods you can change in these custom reports. Right now I have a January through December 15th. I can narrow that down, and I could do a report on just yesterday, which my report's now not showing anything in just yesterday. But you have the ability to narrow these reports down in there. Now, the P&L did have some transactions in yesterday for the prior year. So that modify reports, it takes some time to, play with it, to go in, look at all the features that it gives you in your QuickBooks and in your reports, that you can find reports that will suit your need within your organization to get to those people that need that. Your fiscal committee, or the people directly involved with the fiscal, are going to want more details, and they can get this through QuickBooks. Let's see. If you change a report, you always want to refresh it, or it won't change. When you print a report to QuickBooks, when you develop a report, you can always memorize that report, and it will hold it there. So next month, once you find a report that gives everyone the information that they want, all reports can be memorized. Just hit the memorize, and I'm just going to give it a BOD code for Board of Directors, and I'm going to say OK. So that format of report is going to be waiting for me then when I go into reports and memorized reports, and here's my BOD. So you don't have to fiddle with those settings that you've done after you've taken the time to go through and get everything set the way you want it. Memorize that report. Next month, once you know your numbers are right, go out and print your memorized reports. And it saves a lot each month as you go through printing reports for the end of the month. QuickBooks Premier has a nonprofit version, and that's more adapted for those type of things. You will mark your income, you will mark your class actually as restricted, and it will close each year into your net assets or into your fund balance as needed. You could set up here, you could set up a restricted income class, and you could track it that way. And you could just call it restricted income, put anything in there. You know, you get $5,000 for a new computer system. Once you have that expense, you cut that check for $5,000 to Microsoft for your computers, coded that restricted, you can see the in and out that you used that fund for its restricted use. QuickBooks Premier has, I think, 6 different industries. If you want to spend the money for that, what it does is it has terminology based on the industry. So if you're a nonprofit, the customers are known as donors instead of customers. In QuickBooks Pro, it's just a general accounting package. So it's customers, you know, all the terminology is general business. QuickBooks Premier has a retail, a manufacturing, nonprofit, contractor. So those have terms specific for those industries, and also reports that would be generated specific for those industries. QuickBooks Pro is what they call the workhorse. So it's general business, but you can make it work for what your organization is doing. Premier is just another step up. It has additional reports based on industry. It has some additional pricing type thing if you're invoicing for items that you're selling, it has some additional inventory capabilities in your Premier. So if you can make QuickBooks Pro work, if you don't need those additional features, QuickBooks Pro would work. Yeah, you'd be able to modify current accounts. You'll put those income accounts in. You'll put another restricted class in. You may want to adjust your chart of accounts some to accommodate that, which we find as auditors, it's hard for us to go in, and not always fun when we go in and an organization has totally changed their chart of accounts from the prior year. It's difficult for us with comparison. Your financials, if you change account numbers, when you run a comparative, might not be a real good comparative because you would have put those restricted funds maybe in with donations or grants last year, and now this year they're going to be shown in a restricted, so you're not going to have a real good compare there for another year. What you need to remember is those books are yours, okay? You need to set up your chart of accounts. You need to set up the classes that the organization is getting the information they need to make good decisions. So you need to remember, yes, consult with the accountants or your auditors, but those books are yours. And what comes out of there needs to reflect what your finance committee, what your fiscal people, and what your board needs to see to make decisions. So the funding source is not saying this is a restricted use. Okay, I understand now. Yes, you get $10,000 in from a source that has no restriction on. The board decides that they're going to use that to renovate the office, okay? That's a board restriction on that use. You could create a class to do that so that you're keeping track of those costs. Does that answer your questions? Yeah. And you're not going to want to do that for every income that comes in the door because you're going to end up with a report that's going to mean nothing. But in those terms, if it's easier for your organization to set up a class that the board has decided that they're going to use the $10,000 for one specific reason, it may be easier for your fiscal person to track things by setting up a class for that income. What she's saying is their auditors said that they need to keep their fund balances separate. So whatever the use of those funds, whether it's restricted or non-restricted or operating type, they need to keep those fund balances separate at the end of the year. In a program like QuickBooks Pro, at the end of the year you have a profit or loss at the bottom of those classes. That's all going to close into one equity account, probably called retained earnings because it's business-based software. From that, you would have to allocate how much of that goes into each fund balance based on those classes and what their restriction is. So you would have to do a journal entry in order to allocate those to your fund balance accounts. As we were talking, the nonprofit version of QuickBooks Premier, if you mark those restricted funds, they will close into a net asset account based on those restrictions. Versions of QuickBooks, there are also what's called contributed reports. And those are people like you and I who have gone through and manipulated reports and have now submitted them to QuickBooks. So if you can't find a report you need under the reports that have been designed by QuickBooks, go out here and look through the QuickBooks contributed reports. And you may find something that'll be less time consuming than you sitting there pulling the pieces together that you need to develop the report that you want. And I've used this a couple times with clients that we couldn't find a report that we needed and we went out to the contributed report. We had talked along the way about security, and we want to make sure that anyone using your QuickBooks, you want to make sure that they have their own user ID. That way, when you have audit trail on, not everything in that audit trail is under your name because there's only one login. It's very important. We've talked about fraud. Hopefully none of you will experience that, but unfortunately it's a topic we have to talk about. You want to have everyone that is touching your QuickBooks to have their own password. And that way you can see who's been in and who's been modifying things. All of a sudden, a transaction is changed, a transaction is deleted, and you're the ultimate one responsible, and you're going, I know I didn't do it. You can go to the audit trail, and you can see who's done that because they've had their own individual login. The administrator, when you set up QuickBooks, there's one administrator, and that's the person that can assign passwords and can assign users, and can also assign what that user can do. So the administrator is now in here, and I'm the administrator's assistant. And that administrator can assign what I can do. Does she want me to have all areas of QuickBooks available to me? Does she really want me in there doing anything that I want to do? Control purposes, I would say no. So you can select areas of QuickBooks. It's all broken down. Do you want this person to be able to generate invoices in accounts receivable? And I'm going to get full access. I'm going to do selective access here. So this person or myself create transactions, create and print, create transaction, create reports, view custom credit card numbers. So I'm just going to give myself access to that one. So you can go through, the administrator can go through and give access, as much access or the least amount of access to employees or to people that they're working with. It's a good idea. This may change as that person's job title changes or their position changes. You may have to go back and give them more access. Or if you see things going on that aren't really what you want done, you can go in and restrict. The level to access here would be very selective, and you want to make sure you're giving those people who truly need access to this area. Okay. The question was brought up, how many of you have multiple users in your QuickBooks? Yeah, quite a few. So this is going to be a big area for you. So we'll get through here. Payroll's a biggie. For those of you that are going to do payroll in-house, restrictions on that are absolutely important. So you want to make sure you go through and give only those who need access. Here, this is selective or sensitive accounting areas. You want to see, you want to go through those areas again. You may have a director of your organization that you really don't want that person in changing things, so they may have read-only to reports. They can view things but not change. She said that she has 2 people in the office and are trying to use the file at the same time. Now, it depends what type of QuickBooks did you purchase. Do you know? Okay. Okay. It depends on what you purchase, first of all, if you actually have access to that, because there are single user versions of QuickBooks, and then there's also multi-user, okay, and it's in multi-user mode, okay. I'm not going to have an answer for you on that, but I'll explain to everyone else. QuickBooks, depending on what you purchase, multiple users can be in the organization's file at the same time. So QuickBooks Pro, you can buy a version that 3 people can be accessing that information at the same time. So one person can be in doing accounts payable at the same time someone's doing payroll. You have to, you want to understand that you still have to buy the license for each of those users. but they can all be accessing your file at one time, 3 people. QuickBooks Premier, you can have 5 people accessing your organization's information at the same time if that's important to you, to have multi-users working in that file. In a bigger office, I would think that would be more important to keep everyone busy and keeping things going in your office. So there you can see that the administrator, which is not what you want to see every time there's a change in QuickBooks. You want to make sure that's why you give people different logins. You don't want to see everyone going in as admin here. So this will give you the date that things were entered. So the original date is there in the center, 12/15, and then it was modified at 10/58 again on 12/15. And it will give you the change that was made there on that. So you'll get a whole list of changes, which changes can be legit, but if there's a problem, you can go back through and review this report. What I've used this report for in the past, I've had clients who have given me their QuickBooks file to do their year-end audit. We load it, we do some work at the office, we go out to do our field work, and their numbers on their current system have changed for the year that we're auditing compared to what we have. So I use this report. I can go through and I can look at transactions that were originally entered prior to the fiscal year end, and then I have a modification date. So I can see that after fiscal year end, or after the date I got the QuickBooks, I can tell what was changed. And I can find differences there on what they did, if they did a journal entry, if they deleted an invoice, whatever they did. So I've used this report quite often. In fact, in our own business, we've used this report when our bookkeeper has changed things after year end. So another place that you can keep that from happening here, again, I'm under Edit, under Preferences, and this is an accounting preference, and I can set a date for year end. Very important. I get my clients to do this now because of the reason I just described, that things get changed after we get their QuickBooks file for year end. We start our audit, and they've made changes. So you can set a date in there and a password. If someone else on your staff goes in and tries to post something to the fiscal year end that has closed, they will need to put in a password. And I suggest you do this. It makes your auditors very happy, or your accountants very happy when you do things like this, to protect those numbers that they are now auditing, because they don't want those changing after they start their audit. And for your own sake, because you don't want things to change after you've done your final reports to your board. You want your numbers to stay. So it's just a matter of putting a date in, and a password. And that keeps it all secure. And this is an admin function, that the person logging in under admin would do this. And I suggest you do that. Some other items that I wanted to talk about was verifying data. QuickBooks has a function that you can go through and verify data. You can do it when you back up. If you back up to maybe a thumb drive or something, it goes through and it verifies data. This just goes through and makes sure that your company file is all intact. There's nothing wrong with it. If there is something wrong, it will suggest that you do the rebuild function that's in QuickBooks. It kind of realigns your information, kind of quickens things up if your QuickBooks is running slow. And I suggest you do this. We have this problem in our office because our backup is done of our complete server. We don't individually back up QuickBooks files. So this function doesn't get done. We need to manually go in and make sure that we do this data verification. You can put it on a schedule, and it will do it on its own as long as you keep your computer on. all of these. There we go. So I went under File, and then I went under Utilities, and then I went under Verified Data. And it'll go through. It takes a little bit. If your QuickBooks file is big, it takes a little bit. But you want to run this. I would suggest you want to run it at least once a month. If you're doing your backup through QuickBooks, you can do it with your backup as often as you back up. It does make the process a little longer, but I think it's worth the time to do it. And on that, you want to make sure you're backing up your QuickBooks. Also important. Backup, I would say once a week if you have a big file. I mean, your systems, your network systems may do the backup for you, and they may be backed up every day. But if you don't have that going on, make sure you back up your QuickBooks file. It's important. Let's see, close this update. We talked about earlier, your QuickBooks will come up. When you open QuickBooks, it'll come up, and if there's updates to install, I suggest you install them, and when they come up, you can put it off a day or two, but when those QuickBooks updates come in, you want to make sure that your system is up to date and you have the newest of everything. It may be something behind the scenes that you don't use, that it's updating, that's putting a patch on something, or it may be something important that you really don't know you need, but you do need it. So I would keep those up to date. Anyone have any questions or anything? Any report that you need? You could go in and do, if you want to see just the disbursements that are coming out of your cash account. You could go into your cash account and look, and it'll show you everything in and out of your checking account. You could go in and modify that and tell it you only want checks. You could go in and modify that further and say, I only want checks going out for Grant 1 class. So you could go in and modify a report for multiple filters. So you could limit it to a certain class and a certain transaction type and get it in and get a full report that way. The reporting features, I think, are really good, and once you really have to get in and use them to really know or really understand the advantages of that. But if you go in and start limiting, you want to go in and see what deposits were in your checking account this month. So you go into your cash account, you can modify it, you can limit it to deposits only, and it'll show those deposits. If you were going to handle that, you can go through write checks, okay? Let me get out of here. So we would be under banking, and we would be under write checks. And there in the check number, I would put auto for automatic, since you know it's coming out of your account automatically. When we do payroll tax transfers, we put EFT in there because we know it's coming out through that system. So you can use the number section up there where the check number is, and you can put anything in there that you want. If it's something that's coming out all the time, like a regular, say your phone bill, every month, you could do a memorized transaction. A memorized transaction, you take a picture of your first one, you memorize it, and you can tell QuickBooks every 15th of the month, enter this bill into my system. And you can either have it enter the check directly, or it can go into accounts payable for you. So the next time you pull up your payable, your telephone bill is in there automatically. So anything that's reoccurring like that, rent payments every month, you can have QuickBooks come up and enter it into accounts payable 2 days before it's due. And it'll automatically be in there, and it'll save you steps on having to do that each month. Right. And you could do that. You could put that in the check number up there. You could put online. That way you know who it's going to. So if you run reports, it's going to say, it went to the telephone company or, the electric company or whomever. That way that name is showing up and you have good history. You don't just want to put something in there that it's coming out of your cash account for $600 with no name on it. So you want to make sure that you get the name attached to that online payment in your QuickBooks so that your accountants or your auditors. We're talking about, if you can't hear what's going on, we're talking about controls over automatic or online payments through your organization's account. And what we were talking about, most of those payments, you would also get some type of notification that the bill is due, whether it's the phone bill that you're doing online or a mortgage payment. That bill can still go through your approval process. And you can also get approval to do that automatically online, go on and pay that online. If you have someone outside of the person writing the checks doing the bank reconciliation, that's another check there. That's someone outside of the person who's making those online payments. That's going to go through your account. So in the bank reconciliation process, if you paid your home mortgage instead of the organization mortgage, that person doing that bank reconciliation would see that. Good stuff. And those you can put through just like you would write checks. You can just put online payment in the description or in where the number goes instead of a check number, and they'll go through because you want them to hit so that the person doing the reconciliation can see exactly what's coming out and match it up. Any other questions or comments? No? Very good.